What stocks and help you pick the right stock at the right time.
Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Duggal. Let's get you the headlines. Indian markets swing between gains and losses as declines in telecom stocks are offset by an increase in consumer durable shares.
Power and Finance Ministry officials meet power sector representatives and the RBI to deliberate on the Allahabad High Court's observations seeking a relaxation for stressed power firms.
The SEBI board meets today to discuss changes to the IPO regulations and the tenure of top bosses at stock exchanges.
And food delivery app Swiggy enters the unicorn club, raises more than $200 million from 4 investors. It's now valued at $1 billion.
All right, let's start with looking at the markets. As always, flat day on the Sensex and the Nifty. At least that's what the indices are showing. Neeraj is here with us. Afternoon, Neeraj.
Yeah, I could well just walk off. There's nothing happening, to be honest. But no, yeah, it's a very, very flat day. Banks, at least the private seem to be doing okay. The PSUs, there are a select set of names which have come off as well, at least at the broader end of the spectrum. So Nifty PSU bank index is down about 1.25%. Private banks seem to be doing reasonably okay. Yeah, I mean, the headline said it all. Select consumer durable names at the broader end of the spectrum are doing well. It's a very stock-specific market today. So on Emphasis, there was a JP Morgan note, and the stock is up and active in today's session. CGPR, after days and days of a downtick, suddenly 4 or 5 brokerages have come out and said that they think that the stock now finds some value. So that stock is up about 4.5%. Interglobe Aviation clarifies that there is no ED summons that has come in. So after the 8% slam dunk yesterday, the stock is marginally higher in trade today. So very, very stock specific in the session today. Volumes are a bit thin, though I must admit that they have been a bit thin now for a while now. The last 2 or 3 sessions, we haven't seen volumes really jump up about that 25,000-26,000 crore mark. In today's session at about lunch, we have about 14,000 crores done on an AC cash. Really doubt that the volumes will pick up substantially post that. But watch out for some volatility towards the close of trade on the banks, because it's the weekly Nifty Bank expiry, and that will keep the banking space active, at least in the session today. But we could well do with some activity, because frankly, outside of banks, there's almost nothing that is happening, guys.
Neeraj, thank you so much for that. Let's move on now. Stakeholders in the power sector will meet RBI and Finance Ministry officials today, as directed by the Allahabad High Court, who all get a seat on the table. And what's on the agenda? Nikunj Johri joins us with a quick heads up. Nikunj.
The banking secretary is meeting power producers and other stakeholders from the power industry who sought relief from the Allahabad High Court after the RBI came up with a directive asking for resolution of stressed assets in a day when the default happens. Now, besides power producers, the meeting also has representatives from NTPC, RBI, and also the power secretary who are going to today study the report of Parliamentary Standing Committee on Energy and also the current stressed power projects which are currently under the IBC process. It is also likely that there will be a presentation made by representatives from SBI on the Samadhan scheme that the public sector bank came up with when it comes to resolution of stressed power assets. Over to you.
All right, Nikunj, thanks so much. We'll see what comes out. Just a brief background. There have been various discussions on the kind of structure that could be used to resolve these stress power projects. We're waiting for a decision on that. Let's move on. Patanjali has challenged Adani Wilmar's qualification to bid for Ruchi Soya. The Baba Ramdev promoted company has cited certain family relations which link Adani Wilmar's managing director to some willful defaulters. Vishnath Nair joins us with these exclusive details. Vishnath, what's transpired?
So this meeting that took place on Wednesday, there was a letter that was sent out by Patanjali last month, and that letter was discussed during the meeting, where Patanjali points out that the managing director of Adani Wilmar, Pranav Adani, who's Gautam Adani's nephew, he is married to the daughter of Vikram Kothari, who is the promoter for the Rotomac group. Now remember that Vikram Kothari has been arrested by the Central Bureau of Investigation for a fraud that was perpetrated at Rotomac. About 3,700 500 crore worth of loans are stuck there. So obviously, this familial relationship is playing spoil sport with Adani Wilmar's bid. The recent amendments to the IBC point out that that if you are married to the children of a defaulting promoter or a willful defaulting promoter, then you're not eligible to submit a resolution plan because you're under the related party definition. But of course, this is a recent amendment to the Insolvency and Bankruptcy Code. The previous amendment did not describe what related party meant. So at this point in time, the lenders and the RPI are discussing whether this can be applied to the Adani Wilmar bid at all, considering the bid came before the amendment. So that is a point of discussion at this point in time. The next 7 or 10 days, the RPI will come back with his report on his recommendations in the matter, and then the lenders will have to take a call accordingly.
Okay, so as it was anticipated, it's the deal is not done in favor of Adani Wilmar now
Not
that
yet,
these issues
no.
have
So
come
Patanjali
up.
still has a running choice, and it's likely that Patanjali will litigate this in court, and therefore the matter could get delayed.
All right.
Thanks, Vishwanath, for that. Let's move on. The Economic Offences Wing has arrested 6 people in connection with a cheating case lodged against the DSK group. The arrests include the serving and former chairman of Bank of Maharashtra. In May, the Pune police had filed a 37,000-page charge sheet against real estate developers DS Kulkarni and his wife. As per the charge sheet, the total scam is worth over 2,000 crore. The accused allegedly floated 9 different companies to siphon off the funds collected from over 33,000 investors and fixed deposit holders. The Economic Offences Wing has already booked the Kulkarnis, and in the latest development have arrested the Bank of Maharashtra's present CMD Ravindra Marathe, Executive Director Rajendra Gupta and Zonal Manager Nityanand Deshpande and former CMD Sushil Manoth.
Board members of the Securities and Exchange Board of India will meet today to deliberate on certain changes to the IPO regulations, and also on the agenda are certain proposals that could cap the tenure of top stock exchange officials. Sajit Mangat is joining us with details on what we can expect to hear from SEBI later.
What
Sajit.
stage is the bid
It's
at?
a board meeting where there's going to be some kind of tweaking with respect to governance of stock exchanges. To begin with, there may be a discussion paper on how to bring in new stock exchanges in the country, because there are only 2, and third one is almost non-functional because of no volumes, and how to bring in new products so that the market expands. In addition to that, they're going to look at the tenure of the MD and CEO. Currently, there is no tenure for the MD and CEO of stock exchanges, so they're looking at 5+5 tenure for as tenure of the MD and CEO, and with a cap of 65 years in age there. There could be some IPO regulatory changes, especially with respect to filings of financials, because they want more new age companies to come in, and currently there is a regulation to provide 5 years of financials before as part of the DRHP. That could be reduced to 3 years, so that it allows some bit of relaxation for some of the new age companies to come in. SEBI also finds, and as per the discussion, they have found that in many cases the promoters, even though they are promoters, the shareholding is much lower, and the investors have a higher shareholding in the company, and so there may be some changes to the lock-in rules where the larger broad-based funds who are participating in a company like an AIF can be part of the promoter group, and those shares can be locked in as per the IPO regulation which comes in. R. Gandhi came out with a report on the MI, which is Market Infrastructure Institutions, especially with respect to share registry agents and all. That report can be taken up by the regulator, because you have 2 big deals where Warburg Pincus and one more means Karvi and CMS both are in the fray for are on the block, and private equity is picking up stake in that. So that decision by the board may take place and will decide the fate of these 2 transactions as well, going by what we hear. There will be some minor tweaking of buyback regulations, public announcement of buybacks, but those are minor tweaks which will come in.
Sajid, thank you for that. The follow-on offer of the Bharat 22 ETF received a good institutional response from the institutional investors. The portion reserved for anchor investors was subscribed 3.4 times. Neeraj caught up with Naren, the CIO at ICICI Prudential Asset Management. They are the managers of the ETF. They discussed the possible risks for investors of Bharat 22. Here is a slice of that chat.
I think the only risk that really worries me is that oil going up substantially, and if there is while the government has repeatedly stated through so many interviews that they will not do a subsidy. So I think on oil, like what happened in the pre-2014 period, that's about the only risk that I really worry about. I am a great believer that the corporate banking cycle of NPLs have played out. We are positive on many of the other sectors in the fund, like power, for example, where we think the outlook for the next 5 years does look good after this meaningful correction. So frankly, I would be worried about oil shooting up to 100 or something like that. That would be the biggest risk I worry about in the Bharat 22 ETF.
Okay, and my last question, Naren, to you. You kind of mentioned that there are some technical factors at play because of which the ETF has underperformed. And if you just look at from the time that the ETF launched till now, the Sensex, by and large, being flat too, has given slightly better returns than the ETF. Would you believe that because of maybe some technical factors or otherwise, this is actually a better time, an opportune time to invest in an ETF like this? Or for somebody who is neutral and doesn't necessarily want to invest in an Bharat 22 ETF, but can invest in an index fund as well, like the ones that you may have, maybe that would be a better option. What would your thought be?
See, my view is I don't think if you invest in an index fund, you're going to get the 2.5% discount. And I believe that if you go individually into each of the components of the Bharat 22 ETF and look at the fundamentals, you'll find that actually this is one of the value launches at this point of time, because you have the underlying stocks which have corrected and then you have a 2.5% discount. And I think that combination makes it one of the best investment opportunities in the equity space at this point of time. And so I would say that clearly one can look at it from that viewpoint. Of course, if there is oil shooting up to 100 or something like that, I think it will have a negative impact on the ETF. But otherwise, I would say it has become a value proposition given the correction in the underlying constituents and the 2.5% discount.
Monsoons have added a spring to the step of Bata India. The stock has surged to an all-time high in trade yesterday, fully meeting all analyst targets. What's working for the footwear maker? Yatin Mota is joining us with an analysis. Yatin.
If you look at Bata, the stock went under 500 rupees a piece, during demonetization, is now standing tall over 840 rupees per share as we speak at record highs. Now, what's really worked well for Bata is the kind of distribution network that the company has. It operates nearly 1,400 stores across India, and more importantly, it aims to add nearly 500 stores in the next 4 to 5 years. And most of these stores will come in tier 2 and tier 3 cities. Probably, they will be looking to play the rising purchasing power of the middle class, and also to a certain extent take the benefits of the booming rural economy. And probably that has worked well in terms of strategy for a company like Bata India. Also, the next slide will explain how the sales currently looks for Bata. Nearly 70% of their sales, if you look at the pie chart, come in from the men's and the kids segment, and only 30% comes in from the women footwear segment. Now the company plans to really look at a 40% sales mix for the women's footwear, simply due to the fact that the purchases in terms of the intervals are higher, and also the yield in terms of margins is higher in the women's footwear space. What also that Bata has done smartly is pushing a significant amount of premium brands. So we have likes of Hush Puppies, Power, and Marie Claire. They are doing extremely well. Nearly 40% of Bata's current sales comes in from the premium segment, and probably that has added to the overall gross margin picture. And the next slides will show you how really in the last many quarters the gross margins have seen an improvement. Now, from a level of almost 54% in terms of gross margins, which saw some volatility, the company has been able to improve the gross margins consistently over the last few quarters to a level of 60%, and probably 56%, I beg your pardon. And more importantly, this gives them headway to spend more on promotional activities, more on advertisements, and probably that is reflective of the EBITDA margins also, wherein they have been looking to spend a significant amount of that that gross margin benefit into higher ad and promotional cost and also new store setups. 16.5% was the peak margin what they made, but 13 to 14% is the kind of EBITDA margin the company is currently working with. So far this all has worked for the company, but let's talk about the valuation picture. Not very rosy. FY19 EPS is seen at close to 20 rupees. So if you look at the FY19 price to earning ratio, which is 1 year forward, clearly it's 42 times versus a 5-year average of 40 times. So on the valuation front, probably the stock has hit a record highs, but on the valuation front, clearly it is now at the peak level versus the 5-year average. Of course, that is the reason why if you come to the next slide, which is the analyst recommendation function on the Bloomberg terminal, it clearly shows it has met almost all targets of analysts which cover Bata India. So be it Axis Capital, Spark, Ambit, all of these target prices are met. And from here on, probably if there were to see, we were to see some further upside in the company, it would clearly depend on the kind of sales growth and the same-store sales growth momentum that the company is expecting to be stronger in the coming quarters.
Yathan, thank you for that. That's the story of Bata. But here's another interesting one. You can now be served a legal notice on WhatsApp. A Bombay High Court Judge Gautam Patel recently upheld a notice sent by SBI Cards to a borrower, Rohitas Yadav. Payasuni Upadhyay is now here with us in the studio to explain to us how this works. So I can sue you on WhatsApp.
Yes, you can. No, you cannot sue me. At least you can inform me that you are now planning to sue me,
okay.
Which is where, let me get the basics out of the way. A legal notice is essentially informing the opposite party that a dispute is being taken to court. Now, what happens essentially is that the opposite party, let's say, will figure out a variety of ways to not receive that notice, which is what then leads to delay of the matter, date after date. So what over time now, what has happened is that courts have allowed emails to be accepted as valid notice. In this particular case, the SBI Cards served a legal notice on the defaulting party, which he was not, receiving or, evading the notice, which is when a representative of SBI Cards sent a message on WhatsApp, serving the legal notice as well as the accompanying papers. Justice Gautam Patel of the Bombay High Court then noticed that, there is not only the notice has been sent, but there is this blue tick, which is basically telling you that the opposite party or the other party has read that notice, which Justice Patel said, is a valid notice that has been served and allowed SBI Payments to pursue their case. Here, there are a couple of problems which lawyers have said might crop up in, process like that. What happens in cases where I have, changed my settings to not reflect that blue tick, which is when do courts will then say that the communication has been completed and then that notice will be upheld. We don't know the answer to that. The second sort of problem can come up, and it may happen in even a few cases where maybe the benches are not as equipped to understand technology, which is, let's say, I save the opposite party's number with, I save any number with the name of opposite party. What's being presented in the court is essentially a screenshot or a printout of that. So here's where lawyers say that what Delhi High Court did in March this year was to say you file an affidavit saying that this WhatsApp number belongs to the opposite party. So these are some of the checks and balances the courts will have to put in place, in allowing notices to be sent over WhatsApp.
All right, Payasuni, thanks so much. We'll turn off our ticks and, maybe delete WhatsApp.
I don't know, Ira, what you are doing that. People are going around seeing you and issuing legal notices to you.
All right, thanks for that story. It's a fabulous read on BloombergQuint.com as well. Let's move on. Zomato's got company in the food unicorn club. Homegrown food delivery app Swiggy has just raised $210 million from existing and new investors, which values the company at over $1 billion. Nishant Sharma joins us from Bengaluru for more. Nishant, can you tell us a little bit more about this investment round?
Right, Ira. So the food tech startup Swiggy has become the second food tech startup after Zomato to join the unicorn club, a startup valued more than $1 billion. Now, according to a statement issued by the company, Swiggy has raised about $210 million in a round led by Naspers and DST Global. The round also saw participation from its existing investors, Merchant, Dineping. Now, this round also comes just months after Swiggy raised about $100 million, again from Naspers and Merchant, Dineping. Now, according to people privy to the development, this round values Swiggy at about $1.3 billion, clearly above the $1 billion mark required to be joined the unicorn club. Now, the company said that the investment they're going to use is to expand to new markets and also ramp up the supply chain. A part of investment will also go into double down on the technology in order to ensure a seamless operation on the back end. Now, this investment what also does that it escalate the ongoing war in the food tech industry in India, where Swiggy competes with the likes of Uber Eats, Zomato, and Food Panda India. So where all the four players are flush with funds to take on each other and increase their bandwidth in the country.
Nishant, thank you so much for that. Let's put a break on the other side. Iran softens its stance on oil output. There may be an OPEC deal after all.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution hai. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
One more opportunity to invest in ICICI Prudential Mutual Funds Bharat 22 ETF and own jewels of corporate India. From 6 core sectors at a discount of 2.5%. The scheme seeks to give you growth, stability and create long-term wealth. Non-demat account holders can now invest in the new fund offer of ICICI Prudential Bharat 22 FOF. Hurry, invest in the scheme of your choice. Further fund offer and NFO closed 22nd June 2018. To invest, visit ICICIPruMF.com. Tarakki kare. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Catching up on news feels like a test match. Want the highlights? We hear you.
It's an ocean of news out there. Need a navigator? We hear you.
Do you have analysis paralysis, a case of too much information and not enough time? Do you wish someone would just pick the most relevant topics and tell you what you need to know? We hear you.
Good morning. You're watching Bloomberg Quint. This is First Word.
Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
Welcome back. You're watching Power Lunch. Let's take a look at the headlines. Indian markets swing between gains and losses. The Nifty tests the 10,750 mark. Reliance extends a record-breaking run.
The OPEC is working towards an oil deal after Iran softens its stance on higher oil output.
And Donald Trump reverses course to sign an executive order to keep families together.
We'll talk about that in a bit, but quick check on how the markets are moving. Agam is here with some of the key movers in the last 30 minutes.
Well, Harsha, say for the Nifty options expiry today, it's been an extremely quiet day of trade for the Indian markets. Both the benchmark indices are trading absolutely flat right now. The Nifty Bank Index too, despite the fact that we do have the options expiry, well, that's currently trading flat as well. In terms of the way broader markets are panning out currently, the small cap and the mid cap indices perhaps underperforming just a notch. Small cap index down by as much as nearly 0.6%. Again, let's take a look at the turnovers. there's very little happening when it comes to the cash markets for both the BSE and the NSE. It is the F&O turnovers which have surged at a little over 9.3 lakh crores, and against this is also because of the weekly or bank nifty options expiry. Let's move on and take a look at some of the big nifty movers in today's day of trade. And we do have gains in ICICI Bank, which is leading the charge when it comes to some of these banks. Reliance is the other one, which is extending gains, and that's possibly the reason why we are seeing markets relatively buoyant, and Adani Ports along with Z Entertainment among others which are advancing in trade. On the losing end, some weakness in ONGC as it extends its losses, and weakness in M&M as well as Power Grid, but on the whole not too much to speak for. A very quiet day of trade.
All right, thanks so much for that, Agam. The odds of OPEC reaching an oil production deal increased as Iran edged away from the threat to veto any output hike. Bloomberg TV spoke to oil ministers from across the globe on the sidelines of the OPEC seminar in Vienna. Listen into what they had to say.
Every minister that I have met with agrees that it's time for us to change course and respond to the market and be the grouping of responsible, responsive producers that we have been over the past 18 months. But the market fundamentals have shifted, and it is a reality that the market demands more in the second half than what has been provided in the first half.
There's several alternatives that we're looking for, keeping the levels as they are today versus going all the way up to an increase of 1.5 million barrels and anything in between. Countries are looking at this, and countries have different agendas, and that's a difficult thing. But I think we have to, over all of that, look at the unity of the OPEC as an entity and make sure that we come out with a solution that will be good for everybody.
We are cautiously optimistic that we will have a very successful seminar. You have seen from the sitting sessions this morning, people are very upbeat, very optimistic. Confidence has returned to the industry.
India's oil minister Dharmendra Pradhan expects prices to cool off. He pegs it anywhere between $50 and $60 a barrel. Speaking to Bloomberg's Anne-Marie Hoden, Pradhan said that India will not ask companies to bear the subsidy burden despite higher oil prices. Listen.
My expectation from OPEC in this 7th international seminar, India is the number 3 energy consumer in the world today. India is a country of young persons. India is an aspiring country. With all such advantages, India is a very price-sensitive country. We have to cater the expectation of poor. We have to look into the interest of middle class. As I said, we are a very price-sensitive country. We never support the crude oil price should be around $30, $40. But why it will be $80, why it will be $75, we fail to understand.
At the IEF, you said 50. Do you still think 50? You think
I think that should be the reasonable rate of bandwidth. That should be the rate.
But what would be ideal for India?
No, as I said, why it will be 80? It should be well within the 60, 55, 50, 60. These are the
So what are you hoping OPEC will do?
Yeah, this is my expectation. But this demand and supply, market fundamentals, and other exterior factors are also today influencing oil price. I am hopeful this OPEC will create a roadmap with its import analysts, those who are outside OPEC, country like Russia, they will come to one consensus point, how they will create a roadmap.
So how much oil do you think they should put back into the market? This hike they're talking about, how much do you think it should be?
I learn from you people. That my Russian colleague has mentioned it should be 1.5. That's most welcome.
That's one of the most aggressive ones. They're also talking about possibly 300 to 600,000 barrels. Do you think that's enough?
I think higher production revisit on the production cut and higher supply will be help to stabilize to the price.
So you're just looking for any sort of production increase?
I think it should be increased.
It should be an increase. Will you bring back some subsidy sharing mechanism if current prices sustain?
In India, looking into our future, consciously we have decided to move to market-driven mechanism. We are not going to revisit that issue.
So it's not going to happen anymore?
No, we don't want to change our reformist stand.
Ed Moss, the global commodities head at Citigroup, believes that it's equally crucial to hear out what the OPEC has to say about future increases. Speaking to Bloomberg's Manas Krani, he says the crude market has the appetite to absorb all of the additional output.
I think both are important. The world wants to know how many barrels are actually going to be on the market, but they also want to know whether this is all or whether there are conditions in which more oil would be put in the markets. So I think the tone and an understanding of the exact number of barrels will tell us whether the market's going to go up or down as a result of the...
Let's break that down a little bit. We wrote the story. 300 to 600,000 is what we wrote going into this. Some of your research talks about the impact of 1 million barrels. Talk to me through the size and the timing that the market can cope with in your opinion.
So the market can cope with between 500,000 and 1 million barrels a day. There's more than that's required over the course of the second half of the year if the market is going to remain balanced. So there are so many wildcard unknowns in the market that are mostly bullish unknowns. It's not about Venezuela suddenly coming back with a lot of oil or Libya coming back with a lot of oil. It's how much more oil may be lost to the market. So the market has a sense that these wildcard risks are on the bullish side, and what is this group going to do about them?
Because even OPEC's own numbers suggest there will be a deficit going into the second half of this year. Is that the biggest market risk, supply shock outage back half 2018?
Absolutely, because we know that demand is going to go up in the summer months. If you just look at the difference between the month of May and the month of July, refinery usage rises by 2 million barrels a day. That's a bigger number than anyone's talking about. So the market's going to tighten come what may as we go into the third quarter, and the question is by how much more is it going to tighten?
Okay, the known unknowns. I'm going to channel a little bit of politics here for you. Donald Trump sent out 2 tweets. This is the great unknown for all of us in many ways: trade wars, OPEC, etc. I chatted to Columbia University this morning. We chatted about the petroleum reserves, the special strategic reserve in the United States of America. If Donald Trump doesn't like what he gets here, could he, or do you think there's a risk that he could use some of his reserves?
There's a risk he could do that. It would be a little bit wildly political to do it right now, but if we were to see a spike in prices, and believe me, there's something really new in the market that is not being discussed here, and that is the U.S. has become the largest incremental supplier to the world markets. Last year, U.S. exports of crude oil, petroleum products, natural gas liquids, all of these things combined were about the same amount as OPEC took off the market, 1.7 million barrel a day increase. A year ago, equal to the 1.8 million barrels a day of the Guyana group. This year, the same amount is being added to the market. We have a hurricane season of any sort on the U.S. Gulf Coast that's going to require a lot more than OPEC raising production. It's going to require a release of strategic petroleum reserve barrels. So the wild card is there, and one of the wild cards is weather and the U.S. Gulf Coast. And now that the U.S. is a really major hub for oil supply, another factor has to be considered in the market.
All right, let's move on. Central bankers from 4 of the world's largest economies are scared that a trade war will derail the recovery witnessed in the economy. Speaking at a panel moderated by Bloomberg's economics editor Stephanie Flanders, the central bankers of the US, EU, Japan and Australia agreed that their policies don't factor in the adverse impact of a trade war.
About tariffs, what is being projected in the last set of projections are the tariffs that have been implemented already, which don't have a very significant effect either on output or on prices. A completely different analysis would probably be, but we haven't done it yet, when we will consider the tariffs that have been announced or implemented since then. First. Second, it's not easy, but I think at some point we'll have to figure out what is the potential, what is the round of retaliation effects that's going to take place, and what is the effect, and that's probably the most important thing, what's the effect on confidence? And therefore, what's the effect on business investment? What's the effect on exports? What's the effect on consumers' confidence? we think there have been lessons that one can learn from the past, and they're all very negative. So it's not easy, and it's not yet the time, in a sense, to see what the consequence of monetary policy of all this can be. But there's no reason, there's no ground to be optimistic on that.
Obviously not going to comment on any particular trade policy, but in principle, changes in trade policy could cause us to have to question the outlook. So we have a very wide range of contexts in the business world in the United States and around the world, and as we talk to them, they continually and increasingly express concern over trade developments. We talk about that in the Beige Book, and then the Reserve Bank presidents talk about it in the FOMC meeting, and we talk about it then in the minutes. And I'd say those concerns seem to be rising. For the first time, we're hearing about decisions to postpone investment, postpone hiring, postpone making decisions. That's a new thing. If you ask, is it in the forecast yet? Is it in the outlook? The answer is no. And you don't see it in the performance of the economy, and we don't have any way to know how to put it into the outlook.
Rather than direct impact on the Japanese economy, the indirect impact on the Japanese economy could be quite significant. If this escalation of tariff by US and China continues and actually implemented, that would significantly affect East Asia supply chain, centering China, Korea, Japan, Taiwan, as well as Southeast Asian economies. So I really hope that this escalation could be rescinded and normal sort of trading relationship between the U.S. and China would prevail.
Governor Lowe, did you want to respond on?
Well, on trade, I think what's happening is incredibly disturbing. Can any of us think of a country that's made itself wealthier and boosted productivity growth by building walls? Probably not. I can think of a lot of countries that have made themselves wealthier and more prosperous by reducing walls to people, capital, and goods and services, and my country would probably be kind of the poster child there. So I view what is happening is incredibly worrying. There are the tariffs themselves, I don't think kind of are going to derail the global expansion, but I can think of two mechanisms where that expansion could be derailed. The first is through financial markets, because they're very good at telescoping future events to today. So far, the financial markets have taken a relatively kind of benign interpretation, but that could change very quickly, and so we could see a lot of turbulence as people bring those future events forward to today.
President Trump, you said you just wanted to...
Yeah, on the still on trade and on discussion tariffs, there is a more general aspect of what's happening that it's, in a sense, if possible, would be even more worrisome. And that is the, I would say, the desire for unilateral action that has caught several countries, not only the United States. Yes, we're talking about that in the context of tariffs, but there are other examples of unilateral action that basically undermines the multilateral framework in which I believe all of us grew up. And so the potential changes that this may start are something that is unknown. It's very worrisome. And I cannot see any positive side to that. So a source of considerable, let me use the word that we use with markets, not with people, uncertainty.
Even as the threat of a trade war is disturbing global growth prospects, what seems to be giving these central bankers some solace is the recent pickup in inflation in the developed world. Our latest data in both the US and the Eurozone indicate a narrowing between projected inflation and the actual path of inflation. ECB President Mario Draghi and Fed Chair Jerome Powell weigh in.
Means that the future looks different, looks much more like we were used to see years ago when this relationship was stable and we were looking at that to predict the movement in wages from the labor market conditions. So by and large, you have a variety of factors. We think, we are convinced they were very important in the past in explaining the slow speed of adjustment. Now they are sort of washing out, they're less important. We see, for example, that what was discussed in the first day of this conference, the residuals of our Phillips curve washing out, moving away. The relationship is increasingly capturing a rather traditional design. Now, of course, maybe we got to be careful here because maybe we want to see, absolutely want to see things that don't exist, and therefore we convince ourselves that they exist. But frankly, if I compare, for example, all the projections about future inflation that the ECB has produced over the last 4 or 5 years, you clearly see a greater convergence. You clearly see a narrowing down of the confidence intervals. You clearly see an upward trend in underlying inflation. For example, one thing that's telling is that over our projection horizon, the underlying inflation, now the core inflation, is higher than headline inflation. So in our projections, we're actually discounting some slowdown in oil prices, but an underlying strength which remains through 2020. So I say, yes, I mean, it's a complex continent, 19 countries, very different, lots of reasons. They can explain the past. Not sure that this diversity is what is the best predictor of the future.
But we started the week with quite a provocative speech from Larry Summers, who said that the world was now economically, politically, and socially less prepared for the next downturn than it's ever been. Chairman Powell, do you agree with that?
Well, a couple of things we know are that interest rates have been lower, and we don't know this, but they will probably remain low, which means we'll be closer to the zero lower bound, which may mean that we're more likely to hit the zero lower bound. I think we've taken that into consideration. I think there's still fiscal policy space in the United States. There's less than there used to be. There's less than there should be. But there's some room to react, and I think we kind of take all of that on board. And the real question is, and I guess Larry may have said something about this. I didn't pick that part up, but what's the right policy response to that? And if you look at an economy in the case of the United States, which has growth well above trend, unemployment at 3.8%, inflation moving up, not quite at target, but getting close, and the federal funds rate still in a place that is accommodative in the view of members of the committee, perhaps 100 basis points below the median estimate of a neutral rate. So what that calls for in our thinking is continued gradual rate increases.
Jerome Powell there. Trade ties is not the only thing that Trump is facing backlash for. There's been an outcry over the administration's immigration reforms. The US president introduced a policy that separated migrant children from parents who crossed the border illegally. But he's now been forced to retrace his steps. Yesterday, Trump signed an executive order to keep families together while they're detained. Here's what he said.
I didn't like the sight or the feeling of families being separated. There's a problem that's gone on for many years, as you know, through many administrations, and we're working very hard on immigration. It's been just left out in the cold. People haven't dealt with it, and we are dealing with it.
Bloomberg News reports from Washington on what prompted Trump to repeal his initial orders and the likely course of action from here on.
There was a rising public voter outrage. The Republican members of Congress were feeling the heat. It was the #1 issue that some of them said was being brought up from their folks back home. In addition, the president said that both his wife Melania and his daughter Ivanka also weighed in on this and said that the situation had to be reversed. It had become something of an untenable political position for Trump and for Republicans who are going to be facing voters. The Republican lawmakers will be facing voters in the November elections that will decide control of Congress. So Trump took some action that he said he previously couldn't take, but this at least temporarily fixes some of the problem that he faced with this. There is still some time for the government that will need to set up a system where these families who are detained after they cross illegally can be held intact at military bases and temporary shelters. Right now, the process is that they can only hold them for 20 days, and the president has directed his attorney general to seek court action so that they can hold them longer. But it's going to take some time to set up those family shelters. So in the immediate aftermath of this, some of this will continue to go on, and there'll still be plenty of these pictures being beamed into American households of the children in these separate shelters. They also haven't worked out how they'll reunite some of the children who've already been separated from their parents with them later.
Let's move on to the other interesting story. Walt Disney has outbid Comcast for 21st Century Fox's entertainment assets with a $71.3 billion offer. What's more, Fox has accepted the bid and is close to getting regulatory approval for it. Bloomberg's Dave McCombs reports.
It's a very strong bid. It answers a lot of the questions. One of them had been, how much? What is the price? Are they willing to go over Comcast? It's a significant increase in value, and it has the additional tax advantage in that investors could take up to half of it in stock. So that lowers the tax burden, which had been a big concern that had been mentioned as well by Rupert Murdoch. Then another advantage of this deal on Disney's side is that Murdoch has talked fondly of the company and of wanting his sons to be involved with that as well. So that's another plus that hasn't been settled yet, but that's still something that's out there as a benefit for this kind of deal. It's not a done deal yet, though. They had originally said that they were going to meet with investors on July 10th to consider the previous Disney offer. They've said that's delayed now. So Comcast does have some time, but if you're Brian Roberts, there's a lot of pressure on. This was a very strong bid, and, of course, Fox has already said they've agreed to it. So there's a lot of momentum on their side. Comcast is going to have to come in back with something pretty big. Analysts are saying they would expect a cash bid to be north of $40, something like that. Just come in with more money. That's their best bet to try and win this thing. Their shares having some kind of matching Disney's share offer would not be a good position for them because, as I said, their share price has been pretty weak going into this deal. Comcast, as you know, making this deal a little more complicated. Comcast is simultaneously bidding for Sky. This is another Fox-related asset. Fox has, for a long time, had an offer in to buy the shares of Sky that it doesn't already own. So this is a big reorganization of the top, some of the biggest media assets in the world, and there's a lot of competition for those. And Brian Roberts has his job cut out for him to figure out how to top that Disney bid, especially when Murdoch has said such great things about Disney and wanting to work with Disney, and the company has already said it agreed to that bid.
What's in a name? Apparently a lot. Brand equity database Brands has released its annual list of the world's 100 most valuable brands in 2018. Have any Indian brands made the cut? Have a look.
Out of time. Thank you so much for watching.
Countdown is up next.
Sugar has always been somewhat of a frenemy. Good, but only in small doses. With obesity on the rise, sugar's bad image has grown much worse, with added sugar blamed as a major culprit. Public health experts like to distinguish between naturally occurring sugars like these versus added sugars that can be found in this. Pound for pound, all sugar, whether it's glucose or fructose or a combination of the two, is calorically equal. But the limited sugars found in an apple come with nutrients and dietary fiber. Fiber is filling, which lowers the likelihood of overeating. It also helps pace liver function and avoid spikes in blood sugar. The World Health Organization recommends that the average person eat at the very most 12 teaspoons of added sugar a day. You can find that amount, by the way, in 15 ounces of Coca-Cola. So how have advocates tried to help people cut back on the sweet stuff? Governments in 30 countries and a handful of U.S. cities have started by treating sugary beverages like they do cigarettes or alcohol and taxing them. There are signs that taxes could be working. After Mexico imposed a tax on sugary soda, consumption dropped by more than 7%. Critics argue these taxes disproportionately affect the poor and could lead to food industry job losses. Looking at Mexico's tax again, a study found that the wealthy tend to pay the tax, while poorer people cut back on soda.